Welcome to IM Trading Academy, and today we are focusing on part 5 of our training on crypto trading and investing, and it's all about technical analysis, guys. Technical analysis. All right. So today we'll be learning the meaning of TA. We'll learn about type of TA indicators. I'll give you an introduction to the charts, introduce you to some TA tools, candlesticks, horizontal lines, support and resistance, moving averages, and then finally, I'll give you a simple trading strategy that you can um, use as a beginner using simple technical analysis indicators. All right, so what is TA? Now, TA technical analysis involves using statistical tools, all right, such as charts to analyze trends and historical data gathered from trading activities. All right, this is an example of a chart. All right, so you can look at this chart, look at the past history of a particular asset, and use it to forecast what may happen in the future. That's what TA is all about. Because you want to use TA and FA because you want to try to figure out where the market is going. You want to try to figure out, is it the right time to buy? Is it the right time to sell? Where is the place that the market is likely going to react? That's what you want to do. That's what you want to find out using TA. All right. So you want to use TA to evaluate investments, to identify trading opportunities, and to forecast future price movements of an asset. All right. Now there are two types of indicators basically. The leading indicator, which tries to looks at future outcome and events, and the lagging indicator, which tells you where the market has been. Now, indicators are many. They are all over the place. There are some custom indicators. There are a lot of things you can find, and as you grow as a trader, you tend to like realize which one works for you best. You don't have to use everything. All right. We have the RSI, which is a leading indicator, the moving average, which is the MA, is a lagging indicator. We have volume. Volume itself is an indicator. We have the ATR, average true range, which is a volatility indicator, and so forth. So now let me just give you a quick introduction of what a trading chart looks like. All right, so this is trading view. This is Bitcoin Theta pair. And as you can see, we have some fancy stuff, you know, this fancy chart over here. And you can see these fancy things that looks like candles. They are actually called candlesticks. All right. So this is a chart of the price of Bitcoin over time. All right. And then right here we have the time frame. So we can look at this chart in different time frames. We can look at it in a minute, in an hour, 2 hours, 3 hours, in a day, in a week, in a month. All right, so we can look at this chart using different time frames. What do we have here? I drew these things earlier. These things, they are called horizontal lines. All right, because that's what they are, horizontal lines. I'm going to teach you what they are and how you can use them in this video. All right, so time frame. I've told you about time frame. Your time frame is very important. You need to understand the way time frames are. Right, so this is the daily time frame. So in this time frame, each candle represents a day. In the hour time frame, in the 1 hour time frame, each candle represents an hour. So what would each candle represent in the 4 hour time frame? The answer is simple. Each candle will represent 4 hours. All right. So by just looking at this candle, you know, okay, this is the price action. All right, for the 4 hour time frame. All right. So let me give you a quick introduction to candlesticks. All right, candlesticks represents the behavior of time in the particular time frame you're looking at. All right, so this is the 4 hour time frame, and you can see this candle. It has a upper wick, it has a lower wick, and then it has a body. Right, and why is it red? Red means that price went down. All right, green means the price went up usually. All right. So um, in every green candle, you have the open price opens at a lower price and then closes at a higher price. The reverse is the case for a red candle. Price opens at a higher price and closes at a lower price. All right. Then you see price must have opened there and then came all the way down, and then it went all the way up and then it closed there. All right. So that's why you have this long wick. All right, telling you that okay, price came a little bit higher than when it closed. Right. So this candlestick is also a very great tool that you can use in your technical analysis. In short, candlesticks is a course on its own that we're going to study in detail later. All right. I just want you to just introduce you to them. Now we'll talk more about them in the future. So let's move forward. Support and resistance. All right. Support and resistance are levels where there's a higher likelihood of a reversal or a pause in a trend, right? There are certain areas, right, in the market where price is likely going to react, right? So if price is going up, there are certain areas that we can expect that when it gets to that point, it's probably going to stop or start going down, right? So those areas, those significant areas, they're called areas of support and resistance, right? But before we talk about support and resistance, let me introduce this to some part of the chart that I've not really talked about. So if you look at this, there are many tools here, right? I don't want to bore you and start introducing to things that you will not understand yet. So I'm just going to introduce you to the line tool right now, all right? So this is the horizontal line, all right? So when you click on that, you can drag and drop it. You can see that's a really fat blue line, all right? Bluish green. So you can change the color to yellow, whatever you like. You can make it thinner. You can make it striated. All right, you can customize this your tools however you want. All right, so you can let's duplicate it. Let's make a copy of it and drop it here. All right, so you can use this horizontal line to actually draw out your areas of support and resistance. All right, you can use the horizontal line to draw out your areas of support and resistance. So how do we identify areas of support and resistance in the chart? Very simple. Just look at areas. Now you know this is a plot of price over time. Look at areas where price always reacts. All right, like there are some areas like when price gets to some particular levels, right? It always tends to like react a lot. So those are areas of support and resistance. So for example, if we let's try to figure out some areas of support and resistance in this chart. All right, so just look. You can look at it with your eyes. There are some tools you can use to draw your areas of support and resistance. Let's go to the 1 hour time frame. Yeah. So let's look for an area where price is always bouncing off. All right. Okay. So I can see this is an area of support resistance, right? Because when price got here, it couldn't break through it. It was here at this point it was resistance. It was resistance here too before it finally broke, and then it became support, resistance. All right. So this is a significant area of value because price always tends to react. You can see price was going to break through, but then when it obeyed this support area. Now, your area of support and area of resistance could be the same. Let me explain. All right. So they call it the SRC. All right. So this is price. Price gets here, it meets an area of resistance. All right. So it reacts, it comes back down. Right. So you call this area an area of support, and then it hits the resistance again. Right. Comes back down to support again, and then the third time it hit the resistance, actually broke through it. All right. Met another resistance, but this time when it's coming down, what did it do? This area, which was an area of resistance, became an area of support. All right. So that's what I call it, area of support resistance. All right. So this area, which was once an area of resistance, became support. So you see price bouncing off this support, and then until it broke out through this resistance again. All right. And then it formed a new support, which was the previous resistance. All right. So those areas of support resistance, they are significant areas, because those are areas that you know that price is probably going to react, right? Because there are a lot of people paying attention to those areas, right? Because now we know a lot of people are using technical analysis, and a lot of people are looking at the chart, and they're trying to figure out what's the best place to buy. You want to buy at that point where you feel price is not going to go down anymore, right? So if I was looking at this chart, and I was here, okay, if I was looking at this chart, all right, and I wanted to buy, okay, if I was looking at this chart and I wanted to buy, this would be a good place to buy, right? If this was the situation of the chart right now, this would be a good place to buy, because I know this is an area of support, because I know that, okay, it has been proven that whenever price gets here, it reacts, right? It reacted here, it reacted here, it reacted here, it reacted here, it reacted here. You see, the price is trying to break down, but it could not break down. All right. So I would imagine that, okay, this could also be an area of support. So this could be a good place to buy, all right? But then remember, the support can flip and then turn into resistance, and that's what happened there. If you bought here, well, it have not been a great buy, because price went down, and then you can see this became an area, this became resistance, all right? So the support and resistance is a very important tool that you need to master as a trader. You need to know how to draw your support and resistance line in, and it applies to every time frame. Let's go to the 4-hour time frame. Let's try to look for another area of support or resistance. All right, so this is an area. Okay, this is a very good place. All right, this is a very good support. You can see it was support here, it was support here, because price could not break through. It was support here. So this could be a very good place to buy, right? Be a very good place to buy, because I imagine that when price is coming back down, if it gets here, it's probably going to react. All right, it's probably going to reverse, all right, and then start going back up. Let's see what happens. The price never got back there, all right. But if, for example, market was crashing, I'll probably put a buy around this area, because this is a very strong area of support. And if price breaks it, it might become an area of resistance, right? Right, because we've seen, the way these things work. We've seen it in the past that areas of support could become areas of resistance. This is another example, all right? Yeah, right. So you can see um, in this place, it was forming a resistance, and then it became support, and then it became resistance. And, oh god, you can see it just really choppy. All right, so that's one tool you can use, your support and resistance. And remember, your support and resistance are levels that there's a higher likelihood for the market to react. All right, by react I mean to reverse or to pause a trend, right? Two things can happen when price reach the support resistance. See that it bounces away from the area, as you can see, and it got to an area of support there, it just bounce back, or it breaks through and continues until it gets to another area. All right, and then you need to really pay close attention now, that if it's a resistance or support level is broken with increments in volume, all right, the trend becomes more valid. All right, what this means is that you hit support the first time, all right, you hit it the second time, you hit it The next time you're hitting it, you're probably going to break through. There's a rule called the rule of five, right? That says that if an area of support is hit 5 times, there's likelihood that it's going to be broken. All right, so you want to take note of that as you're trading. All right, so let's continue. There are other types of support and resistance. You have trend line support and resistance. You have the moving average support and resistance. You have the Fibonacci support and resistance. We're going to talk about more on that later. All right, you can use some of your tools here to draw a trend line. All right, you can draw a trend line. This is what a trend line looks like. All right, I'm going to give you more details on how to draw a trend line later. All right, let me just move these lines. All right, if you're drawing a trend line, you're trying to you want to make sure you hit as many supports, as many points as possible, right? I think this is a good trend line. I just drew it, but you can see that it's actually quite significant because you can see price reacted here, price reacted here, price reacted here, and then the trend line was broken, all right, and then at this point it was support, and then it became resistance. It became resistance here, and then resistance here, and then broken again, and then you can see it's actually following, right? So we can assume that price will get here and then bounce back, or price will bounce, will break the support, and then become resistance. All right, so you can use your trend line, which is on that tool, to draw areas of support and resistance. Another thing you can use is your moving average or Fibonacci. We're not going to talk about Fibonacci in this video, right? But let's talk a little about moving average. All right, you can see the moving average. So these white lines, they are called moving average lines. All right, I'm going to talk more about it in this video. All right, so you can see the 50 EMA acting like the 50 EMA acting like a good support. All right, and then it became resistance, and then it became support, and you can buy here, right? Because the EMA is telling us that this could be good support, but this is a lagging indicator. All right, so let us proceed. What is moving average? What is this EMA I just talked about? All right, so moving average is another indicator, all right, that is used to identify the market trend. All right, what does that mean? Generally, as a trader, you want to trade in the direction of the trend. If the market is going up, you want to be buying. If the market is going down, you want to be selling. As a trader, right, you must have heard the saying, buy low and sell high. That's for investors. For traders, if market is trending upward, you want to be buying. You want to trade in the direction of the trend. Market is trending downward, you want to be selling. Right? There's a saying, in a bull market, buy high and close higher. In a bear market or a market that is going down, you want to sell low. Even if the price is low, just sell, right? And close lower, right? Because markets tend to follow a trend, right? And once you are in a trend, you just identify the trend and trade in the direction of the trend, right? So how do you identify the trend? You can use the moving average to identify the trend. Once the price, right, which is represented by these candlesticks, is above the moving average, the 50 moving average and the 200 moving average, we can say that this is a bullish trend. But if it is the reverse, if price is below the moving average, we can say we are in a downtrend. All right. I want to give you an example of a situation where price was actually below the moving average. Okay, yeah. So you can see here the price. This is the price, and this is the moving average, which is the white lines. And you can see price is below the moving average, so we can say this is a down. This is a downtrend. So you want to be looking for opportunities to short the market, all right, or to sell, all right. So there are many types of moving averages. We have the simple moving average. The one we're using in this chart is the exponential moving average. You can see it, the EMA, all right, exponential moving average. I like the exponential moving average because it's more reactive to price. All right, so how do you bring out the moving average? I'm just going to hide this one now. How do you bring out the moving average in your chart? You just go here and then you search for it, exponential moving average. Okay, moving average exponential, that's it. And then you click on it. Then you can, and then you come over and then you see, okay, this is the, okay, the blue one, right? That's moving average, but that's the 9 period moving average. You want to change it to 50. All right, the 50 period moving average and the 200 period moving average are the most popular. All right, the 200 moving average is sort of a long term moving average, while the 50 period moving average is sort of a short term moving average. All right, so let's add, um, no, click on the wrong thing. Let's add the 200 moving average. All right, search for moving average, exponential, click on it, and then you adjust the settings, then the period 200. Yes, right. You can change the color of these lines to whatever you want. So now the indicator on this chart is the moving average, and I told you you use the moving average for doing what? To figure out the trend of the market. All right. You can see when we talk about support and resistance, the moving average can act as support, right? It can just show you some your area of support, right? So, but I want to teach you one technique, one strategy that is very popular with moving averages. All right, it's called the golden cross. The golden cross strategy. All right. Um, Generally, indicators they are meant to indicate to you certain things in the market. They are meant to show you things. All right. They're meant to like prompt you, give you a signal that something is about to happen in the market, right? Or that something has happened in the market, right? So now the golden cross could signal that the market trend has changed to uh, a bullish trend. All right. Now, a golden cross is a chart pattern that involves a short-term moving average, example the 50 EMA, crossing above a long-term moving average, the 200 EMA. Right. Okay. Let's look at this now. Okay. So this is the 50 EMA. This is the 200 EMA. Right. And we said that the golden cross is a chart pattern that involves a short-term moving average crossing above a long-term moving average. Right. Let's see. Okay. Uh, I, I didn't script this. I just picked this chart randomly. So okay, yes, fantastic, fantastic. I've seen what I'm looking for. All right. So now I told you that you can use technical analysis to signal when to get in or out of a trade. All right. So this is a typical example. Now you can see the market was ranging for a while. It was ranging for a while, and then something happened. Ranging means that market is not trending up or down. You can say it's going sideways, or the market is just it's not actually moving. It's just like it's going sideways. I don't know how to put that. I don't know how to say it. I don't know how else to say that. All right. Um so what happened here is that the I like to look for another. It's not very pronounced there, right? I want to look for. I'm looking for a point where the 50 EMA crosses above the 200 EMA. So this is the 200 EMA. This is the 50 EMA. Price is below the 250 EMA. What does it tell you? tell you that this is a downtrend, right? But let's see what happens when the 50 EMA crosses above the 200 EMA. When the 50 EMA crosses above the 200 EMA, what that signals to you is that we are about to enter into an uptrend, right? It's telling you that the market is about to go up, right? So that could be a buy signal, right? So this is the 50 EMA, just crossed the 200 EMA. You can see price went up, right? Let's see the price reacted. Ooh, 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 ooh. You can see price just kept going up, going up, going up, going up, going up, going up. So if you took that as a signal, if you took that as a buy signal, that whenever the 50 EMA crosses the 200 EMA, buy, right? That could be a signal. Uh, you could have made a lot of money from this trade, right? And you can see the 50 EMA crossed below the 200 EMA. So let me go back to our slide. All right, there's another chart pattern called the death cross. Death cross is like the reverse of the golden cross, and death cross is a chart pattern that involves the 50 EMA crossing below the 200 EMA. And what this tells you is that the trend has changed, that the market is about to go down. So do you see how you can use the moving average indicator, to figure out the trend of the market and help us trade better? All right. So that is just an introduction to technical analysis and the way it works. All right. In technical analysis, you want to use statistical tools such as chart patterns to analyze trends, you know, and data gathered from trading activities, right? You want to look at the price movement, you want to look at the volume, you want to look at the volatility. What happens when there's an increase in volume? Does price go up or down? These are questions that you are asking as a technical analyst, all right? What happens when there is a lot of volatility in the market? How does that influence my trading? All right, you want to use technical analysis to evaluate your trading and your investing. You want to identify trading opportunities. We just learned now how we can use the 50 EMA and the 200 EMA to try to figure out a good time to buy, right? Whenever you see the 50 EMA cross above the 200 EMA, is a buy signal. It tells you that the trend has changed and the market is about to go up. So what do? You buy, all right? And when the reverse happens, when the 50 EMA crosses below the 200 EMA, it tells you that, oh, the trend has changed and the market is about to go down, all right? So that's how you use technical analysis. And this EMA, we didn't actually go in depth, right? There's an explanation that shows you. We didn't even talk about the meaning of EMA, all right? The meaning of moving average, or how the moving average is calculated, or how the line works, all right? This is just an introductory video. We're going to do more in-depth study in other TA videos, all right? So let's go back now and think about how we can actually apply what we've learned today, right, in a simple trading strategy. Right, this is something I learned from Reina Teo. He's a YouTuber, trading guru, very awesome guy. Right, the T strategy. Right, so now before you get into the market as a trader, you need to have a trading strategy. Right, you need to have a plan of how do you get into the market, how do you enter a trade, how do you get out of the trade, right? And the T strategy has three parts, right? Whenever you get into the market, the first thing you want to do is to identify the trend, T. And we learned that the tool you can use to identify the trend is your moving average, your MA, all right? And that tool is trend magic. I'm going to introduce you to this tool later on, all right? Now, locate the areas of value. That's the next thing you need to do. After you figured out the trend of the market, right? You want to figure out the trend of the market because if the market is trending upward, you want to be buying. So this is the chart of Bitcoin right now. You can see the market is obviously trending upward, right? If you are buying, if you're looking for buying opportunities, you're like more likely to make money than someone who is shorting the market. All right, but it doesn't matter. You can make money if you're buying or selling. But what I'm trying to say is that there's a greater probability of you winning if you're trading in the direction of the trend. Right? That is why the first thing you do when you get into the market and you want to trade is what? You identify the trend. The second thing to do is to locate an area of value. That's the support and resistance area. All right. Remember, we've talked about support and resistance. Those are areas that market is likely going to react. All right. So you can, and remember, you can draw your support and resistance using horizontal lines. You can draw it using trend lines. And you can draw it using your exponential moving average or moving average. All right. So the first thing you need to do is identify the trend. The second thing is locate the area of value. And the second thing is, the last thing is you look for an entry trigger. All right. And one of the indicators that you can use to look for an entry trigger is your candlestick. All right. Remember, we talked about the candlestick in our first in this slide. We talked about um, a bullish candle and a bearish candle. Did we? No, we didn't talk about that. We'll talk about that in another video. But we talked about the way we just give an introduction. All right. So the tail method or the tail strategy is a simple strategy that beginners can use, right? And it involves identifying the trend, locate an area of value, and then look for an entry trigger. Once you identify the trend, you only trade in the direction of the trend, locate an area of value, your support and resistance. You want to buy an area of support and you want to be selling an area of resistance, right? Because price will always bounce off area of support and go back up, right? Most times. And then you look for an entry trigger, all right? You can use this to trade the phone, to trade pullback or breakout. You can use it in scalping, day trading, swing trading, or position trading. Um, yes, use the. I've said this before. Use the 50 and 200 EMA to determine the trend of the market. You trade in the direction of the trend. You buy at support levels if the market is in an uptrend. You sell at resistance level if the market is in a downtrend. Okay, so this is another simple trading strategy using your technical analysis indicator. This is me just going over the things that I've said over and over and again. I'm just trying to make sure that you understand it, right? So this is a checklist that as a trader you can use. What is the slant of the 200 EMA related to price? Is it slanting up? If it's slanting up, what do? You buy. If you're not sure, you wait. If it's slanting down, you sell. All right. Is the price above the 50 EMA? If the price above the 50 EMA, it tells you that what? That you are in an uptrend. So what do? You buy. If it's not, if you're not sure, you wait. If the price is below the 50 EMA, you what? You sell. All right. So I'm going to talk about more about this trading strategy in another video, in part 2 of this video. Make sure that you don't miss part 2 of this video. Um, I'm going to go in depth to talk about things I couldn't talk about on this video because of time. I don't want to make this video too long. All right, so I'm just going to end this video now. I hope you learned some things. This is just an introduction to technical analysis. We've talked about the meaning of technical analysis. You're just trying to use chart patterns, right, to try to figure out where the market has been and try to predict where the market is going. And technical analysis works, all right. Technical analysis works, but technical analysis is not absolute, right? You can't just rely on it 100% because uh, market is all about probabilities. There's no certainty, right? We've talked about the golden cross strategy, that whenever the 50 EMA crosses above the 200 EMA, you buy. Sometimes when you buy, sometimes price goes down, you don't make money, right? But if you back test this, I mean, if you like check um, the history of whenever there was a golden cross, you will see that there's a greater probability for you to make money when you buy, you know, when you follow this golden cross strategy. All right. So that being said, I hope this was value for your time. Um, if you're not a part of the emeCrypto community, you are missing out a lot. All right, that's one place you get to network with top traders. You get quality TA and FA for your trade. You gain access to premium signals. And if you want to join, just follow this link bit.ly/ Eme Trading Academy. It's case sensitive, EME small letter T capital letter trading academy starts with capital letter. All right, so visit our website emeCrypto.com and reach out to us on Twitter at emeCrypto. All right, you can call it Eme, you can call it in, whatever you want to call it. I hope this video was value for your time. Thank you for sticking to the end. Thank you for staying till the end. Um, See you in part 2 of this video. Bye bye.